What's going on, guys, and welcome back to another video. So everybody wants to know, how do you make a passive income? People keep on asking, how is it possible to make a passive income, and how will this solve their problems? They want to not work another day in their life. They want to be able to go and lounge on the beach whenever they feel like it. Get up at any time of the day. Now, is it possible? Can you do this? The answer is yes. Can you live like this? The answer is yes. But the key is, how do you get started? So in today's video, I want to address that. I want to show you how anybody at all, can make a passive income starting with just $100. So if you don't think this is true, make sure you watch this entire video. Now, here's the key. The key to all this is you have to put together the key component. And what is that key component? That key component is your $100 starting investment cannot be your last investment. You have to consistently add to this investment in order to see more of a passive income that you could ultimately live off of. Too many people think passive income, you put a little bit of money, you just set it, forget it, and you are set for the rest of your life. That's not entirely true. Here's what you need to do, and let me walk you through the process. The very first thing you need to do something that's called dividend investing. What this means is that you invest into companies that pay you a dividend every month, every quarter, maybe even every year. Now, with dividend investing, you can buy $100 of a specific stock or ETF. You can then get paid a small percentage, a little bit of a dividend or kickback, if you will, every single month or every single quarter. And you receive this small dividend just for being a shareholder of said company. For instance, just to give you an idea, Johnson & Johnson, they pay a dividend of 2.47% every single year. Or currently with their share price, it comes out to $4.24 per share, which is pretty good. ExxonMobil, they pay a dividend of 4.32% every single year. They are currently paying $3.52 per share. 3M, they pay a dividend of $3.57, $3 or 3.57%, but with their share price, they're paying $5.73 per share. And then we got Coca-Cola. They pay 2.76% or $1.68 per share. Now, this is just a list of 4 stocks, but here's what I would do. The very first thing I would do is you need to open up an account that allows you to trade fractional shares. Here's the reason why you do this. If you create an account that allows you to trade fractional shares, which things like Robinhood does, Webull does, okay, I'd stick with those two, okay. Now, if you go and open up a Webull account, and I'll put a link to it down in the description box below, you can get 3 free stocks valued up to $6,300. And all you got to do is just deposit your first $100. Okay? Now, that's step 1. Step 2, once you have this account opened, I would do one thing. I would buy 4 stocks. I'd split up your $100 into 4 different groups. I'd put $25 into each reputable company that is producing a dividend. Now, this isn't financial advice, but the 4 stocks that I listed above, those ones are, just recently, those are actually ones that I'm looking at buying very soon, because I'm shifting my focus from almost 100% technology over to more growth and dividend investing. Okay, so with this whole change in the markets, wealth transfer, I'm looking at trying to diversify my portfolios a few different ways, and this is one of those ways. But here's the key, and I'm going to show you how you do this. I'm going to show you kind of the numbers behind this and why it makes sense both financially and for tax purposes. Dividend investing is an incredible way to actually preserve your wealth, and I want to explain why in just a second. But the first thing you need to do is every week or every other week, you need to deposit another $100 into this account. And every time you have more money that comes in, whether it's a dividend that comes in, and there's something called DRIP, It's a dividend reinvesting plan. Okay. Now, if you have that included, which currently Webull doesn't have, but they offer fractional shares. So if you don't have DRIP enabled, then you will get the money in your account and then you have to go and purchase those shares yourself. Okay. So a little bit more work, but it's not that bad. Now, every time you get money in your account, go and buy more shares of the companies that pay a dividend that you firmly believe in. And in order to be successful as a dividend investor, you must continue to purchase these shares, not just for the next couple weeks or the next couple months. Just keep buying more shares. If the price dips, you just keep buying the same $100 worth of shares. If the price goes up, you can afford less, but you're still putting in the same $100. You never change. But here's the best part, okay? And I want you to look at this graph, okay? I want you to look at this dividend calculator right here, okay? I'm gonna fill this in. So we're starting with $100, okay? So that's what we're starting with. We're only gonna buy one share because we only have $100. So our initial investment is just $100. I'm gonna put a holding period for 10 years so that you can see what it's gonna look like, but it's gonna be different, okay? Now, expected dividend on, let's just use ExxonMobil. They're 4.32%, okay, 4.32%. That's what we're going to use. Now, we're going to say we get distributions quarterly. I can't remember with ExxonMobil. The expected annual dividend increase in percentage, I'm not even going to put anything there. I'll just leave it. Now, the expected annual share price, let's say that increases by just 1% per year, okay? And the annual contributions, and you can see right here, DRIP, Dividend Reinvestment Plan. Now, we're going to say with DRIP because you're just going to put this money right back in anyway, so it's essentially the same thing. But here's what we're going to do. For annual contribution, right here, let's say you do, let's say $100 every other week. That means you're going to put in about $2,600 per year, okay? Now, let's go and look at this. And I'm going to leave the dividend tax rate at 0, and I'm going to explain why in just a second, because honestly, this is the best part. I absolutely love dividend taxes because, well, you save money. Look at this. I'm going to calculate the returns, and look at these numbers down here, okay? So total we put in, after 10 years, we put in $26,100 is what we're going to have in there, okay? Let me show you what this looks like. So we just put in $26,100. But our ending balance is $33,473. That's pretty good. That means we have gained $6,000 in 10 years. Okay? That's pretty good. Our total return, 28.25%. Not bad. But let's say, okay, and I'm going to show you something else in just a minute as to what you get every single year. But let's say we do $100 a week. Well, that changes things. Let's go to 5,200. Okay, that's what we got there. Gonna leave everything the same. Okay, now remember, we were at 33,000, but we doubled it. Okay, we doubled it. We went to, instead of 2,600, we are doing 52. So is this gonna be over 66? Let's look. It is 66, okay? But now, we got $11,955 in dividend payments, okay? Total return, 28.17. But look at this. After 10 years, this is what you have in your account, $66,778. Let me show you this. And we can just pull up a simple calculator for this. So we have $66,778, okay? We're gonna multiply that by our dividend, 4.32%. This is what you'll get every single year. Now, if we divide that by 12, which is monthly, that means every single month you would get $240 in dividends that you could either reinvest or you can live off of this. Okay, you can use this money for a car payment, for food, for part of housing, whatever, right? A cell phone bill, and who knows, in 10 years, this might just cover a Kit Kat bar. I don't know. But here's the best part, and this is what I absolutely love, okay? This is what I honestly absolutely love about dividend investing is the way it works for your tax rate, okay? So I'm gonna show you what it's gonna look like for 2022, which is this year. Look at this. So if you are married filing jointly, I'll just use that. I'll just use married filing jointly right here. If you're married filing jointly and you make under $83,350 per year as a couple combined, your tax filing status is 0%. How incredible is that? You wouldn't pay anything. Now, you have to hold these companies, okay, and there's, it has to be a qualified dividend. You have to hold it for long enough, and there's a whole thing right here that kind of talks about it. Now, I'm not going to go into all those details, okay, because here's the reason why. This is what matters. You will not pay more than 20%. 20% is the cap on dividend investing, okay? So let me go back to this calculator right here. So let's say you got to pay 15%, okay? So let's take this number and we'll multiply it by 0.15. So every single month you pay $36, but that's if you're making between $83,000 and $517,000. But that's what I absolutely love about this is you barely have to pay anything. If you have to pay anything at all, because the majority of people are going to be right here, going to be at that 0%. But, and I want to show you some more. I want to show you some more numbers, okay? Because here's what I really like. If you can really ramp up your investing, okay? And let's say you start investing with, let's say $5,000. Okay, I just want to use $5,000. Look at this, okay? $5,000, okay? Number of shares. We're going to use, let's say, I think Coca-Cola is like, can't remember what they are, but let's just say number of shares, we'll just put in 1,000, okay? Actually, share price, we'll put in 50. Oops. Put in $50. If I can figure this out. $50, there we go. Initial investment is 5,000. There we go. All right, so we're going to take that. That's going to be our initial investment. Do the exact same numbers. Annual contribution, $5,200. Still 52 weeks a year, $100 every single week. That's what we're going to put. Okay, look at this. And calculate that return. That return now is at 75,000. Okay, because we're using our initial investment is 5,000, not $100. Okay, now here's the reason why I want to show you this. Let me pull up that calculator again. Not everything is paying 4.32%. There are some things out there that pay 6 to 7%. So let me show you this. Let's say over the next 10 years, you're just very conservative, 4, 5%, that's it. But let's say in 10 years, you're just going all for it. You want all the dividends that you can get. Look at this. So 75,000, okay? Now we're gonna multiply that by 0.7, okay, 7%. This is what we're gonna get every single year. You get $5,000, okay? Now, look at this. Let's divide that by 12. That means every single month you get $437. You are almost halfway to 1,000. So if you had, okay, all you have to have is about $150,000. Okay, let me show you that. Let me show you that really quick. $150,000. Okay, times 0.07, 7%. That's what you're going to get. Divided by 12. Okay, $875. $875. Okay, every single month you get $875. So you could almost pay for, you could get a very small apartment. You could pay for a really nice car. You could pay for vacations. You can pay for all this stuff. But it's all based off of your dividends. That's the reason I think this is so important. And I think a lot of people miss this, is that you can make money, you can make a passive income by dividend investing. And even though you're starting small, consistency, compound interest, growth, that's what's making this somewhat easier to do, because you're not requiring that passive income today, you're building it for the future. And that's what I think so many people miss, is you got those passive income millionaires. Well, how'd they get there? They didn't start today or start yesterday and they're a millionaire today. They probably started 5, 10, 15, 20 years ago and are making money consistently every single month by investing into strong companies that pay a dividend. So that's just what I wanted to leave you with today. I think there's so many opportunities here. If you have any questions whatsoever, you can always ask your questions down in the comment section below. Again, I just want to thank you guys for watching. Have a wonderful rest of your day. Consider subscribing, and I'll see you guys on the next one.